Tomorrow is the last time this Parliament the Chancellor will open the famous red budget box. And because inflation is falling, George Osborne will announce a modest reduction in austerity and cuts to public services. So what do the latest deficit figures tell us? Well, they show that the gap between what the government spends and what it takes in taxes is still a huge £91.3 billion, which is adding more than £10 million to the national debt every hour. But on the basis of the government's plans laid out in the autumn, that deficit is set to turn into a substantial surplus of more than £23 billion in 2020, at which point the national debt would be falling. Now, to turn the deficit into a surplus, the Tory part of the government is committed to making cuts in government spending of more than 14%. However, if the Tories were to honour their promises to protect spending on health, schools and overseas development, the cuts for the other non-protected departments would be 27%, which some would see as vandalising those public services and others say are just impossible to achieve.
The cuts over the 4 years starting in April 2016 would actually be bigger than the cuts over the 5 years of this Parliament. So you'd have more cuts over a slightly shorter period. Now, of course, that could be alleviated with cuts to welfare, but it would still imply pretty deep cuts to public service spending and ones that would be very hard to achieve.
But it looks like the squeeze won't have to be quite so severe, because falling inflation is expected to yield a £6 billion windfall for the Chancellor from reduced welfare and debt interest payments. Also, the Tories could opt for less austerity and go for just a small surplus rather than the £23 billion planned, and that would mean they would have to make £30 billion a year less in cuts. But a Tory government would still have to make £27 billion a year more in spending cuts than a Labour one, because Labour's budget rule allows it to borrow to invest, unlike the Tories.
Well, there's many areas of the economy that could do with extra infrastructure spending, from housing to transport. And given that the government can now borrow at very low interest rates, now could be the right time to do that. However, borrowing is borrowing. It would leave government debt higher than it would otherwise be. That might give financial markets the fright, and it could also leave the government with less room for manoeuvre were the economy to turn down again.
So could this be the new pound that'll be in our pockets soon, following a competition organised by the Chancellor? Maybe. And thanks to low inflation, the next Chancellor will have £6 billion more of them than was expected just a few weeks ago. Robert Peston, BBC News.